Stacey Dunphy, and today I'm going to do a 3-part video series for first home buyers. I remember myself when I bought my first home. It is exciting, but it's also daunting and it can be really confusing. And so we're just hoping to break down just 3 really important parts of being a first home buyer in these 3 next videos. So the first one, today's video, is going to be all about saving and just those initial tips to get you started. Second one's going to be all about what to do when you're actually in that stage where you're looking for the property. And the third one's going to be some alternative sort of options for first home buyers who don't necessarily have savings. But today it's our stock standard, what to do if you are a first home buyer and you are just starting out. So first thing you want to think about is savings. A good figure to keep in mind is 10%. If you're going to go about it the old traditional route and save up the money yourself, 10% of the purchase price. So if you're buying something that's $200,000, $20,000, if you're buying something that's $400,000, $40,000, that's the figure to keep in mind. Now, bear in mind that doesn't just go off the price of your home. That'll end up being eaten up with stamp duty and lender's mortgage insurance and those sorts of costs, but it's a really good rough figure to start out with. So how do you get that 10% saved up? First thing I would recommend is put the money into a different bank to where your normal everyday transaction accounts are. Now what I mean by that is maybe you bank over here with Commonwealth Bank. You might decide to put your savings into an ING account. Not because necessarily one's better than the other. I mean, you're going to shop around and find a good interest-bearing account. But the reason I want you to separate it from where your normal banking is because then you're less likely to spend it. Have it off your internet banking. Don't have it set up to an FPOSA card if you can help it. Just keep it separate. If you never look at it, you'll be less likely to spend it. But you've got to get the money in there. So the next thing I would say is see if there's a way that you can actually deduct the money straight from your salary. Work out how much you know that you can put aside each week or fortnight, whatever your pay is, and then just get that sent straight from your pay into your account. Again, if you never see it, you're less likely to spend it. And if you can add extra to it, great. But at least you know then that that minimum amount is going through to there. Third step is if you have any car loans, personal loans, anything like that, logically and intuitively you might think, right, I'm going to pay them off as quickly as possible. I would just say in that regard, speak to a broker before you actually do that, because the banks want this other magical figure of 5%. So you want to try and save up 10%, but the banks want to see at least 5% of that money has been saved up personally by you over a period of 3, 6 months, etc. And if you're putting extra money into your car loan, it may impact on genuine savings. So again, it might seem a bit illogical, but just speak to a broker before you make any big decisions like that. They can sit down and step you through what the pros and cons might be. And the last thing I would say is while you're making your savings, just watch out for easy credit. Now, in my opinion, the easiest credit to get is quite often the most detrimental. It's pretty easy to go out there and get a credit card, something on a really high interest rate, something that you may rack up thousands of dollars of debt with and then have issues paying back later. So just especially while you're in that first home buyer saving process, look for anyone really, just be careful of credit card debt, car loans, personal loans, careful about taking on any more debt while you're in that real savings process. And then when you're ready, of course, start chatting to a broker. So while you're working towards your 10%, when you get to about 8%, think, okay, now's the time when I want to go and see someone at Up Loans, give them a call, or just your local broker or your bank manager, sit down with them and say, I'm nearly ready, where do we go to from here? All right, look forward to chatting you in the next 2 videos for first home buyers.